Hi everyone, welcome to Value. So today we'll hit Unity software and it is getting slaughtered and the after hours after the release of its financial results. We'll dive into those right after I go through the share price. It's at $48, but the after hours is $34. At the $48 price tag, we're looking at $14 billion. Though it's going to be a lot less than 14 tomorrow when it just gets sold down massively. It's just amazing watching these large percentage falls. It's like it just begins to look like entertainment to an extent, and shock and horror if you hold the stock, of course. I'm sometimes lost for words. Like in this market, like just watching Upstart drop like 60% yesterday, and then watching Unity drop 30%. Like it's just shock and horror, and in a way, like the market's just relentless currently. So we're just going to dive into the first quarter financial results that they've just released. So they did a record quarter of 320 million. So when I say record quarter, it sounds really nice, but then obviously the market's interpreting these things in a very different way. So that was a 36% increase year on year. And as I put here, they're a world-leading platform for creating and operating interactive, real-time 3D content. So this in that sense, like this company's quite a core company in terms of kind of the entertainment's kind of gaming space. Like I'm sure every one of us has probably used some app or game or something that had Unity incorporated in it. Which is kind of what makes this company amazing. So that's why when they do like 36% revenue growth, the market still looks at it in a positive light. Whereas with Upstart, Upstart decreased their growth rates to about 50%, and they got slaughtered yesterday. Upstart has a valuation of less than $3 billion right now. Unity Software has a valuation of $14 billion. So, it's up to the market. Market could be kind, or it could just literally cut them down to size. Like we could see a 50% drop tomorrow when the market actually opens. And yeah, like that could be the reality, because the market can just be cruel and it can be kind, but right now it's more cruel than it is kind. But yeah, at this current situation, negative 30% is not nice in general anyway. So yeah, if we dive into some of the comments, in the first quarter we continue to add new customers across industries and expand our business of existing customers as we made strategic investments to support long-term value creation while improving margins. So that's the thing. They're more focused on that growing phase, and even at the high growth phase, they're at 36%. So interpret that as you will. But yeah, even though they're producing 320 million, they're still actually on an operating loss. So their accounting loss, basically, which includes the non-cash expenses, is $171 million, which is a lot considering your revenue is $320 million. But if they take away those non-cash expenses, which is what we see as non-GAAP, so whenever you see non-GAAP, that's non-cash basically. The non-GAAP loss was $23 million. So in the actual sense, they lost $23 million, which isn't too bad in that kind of light. But you still have to consider that, hey, a lot of it was stock-based compensation, and at the end of the day, if you're not paying your staff with stock, at the end of the day you still have to pay them somehow, so you'll probably be paying them in cash anyway. So I wouldn't disregard this whole loss entirely, because in some light that cost is still a real cost, because it's a dilution to you as a shareholder. So you still have to see it in that way. But at the current situation, we're all most concerned about how much cash they hold and how much cash they can, keep the lights on basically, so that they don't have to raise more money, which you can be reassured. But in a sense that, hey, free cash flow in the first quarter was 86 million, which is really nice. So in that sense, they're kind of positive in that sense, compared to negative 100 million for the same period last year. And the really nice part is cash equivalents and restricted cash was $1.2 billion, and that's compared to 1.1 a year ago. So their cash position has actually increased because they're actually operating on a cash positive basis. So even when we consider that net gap loss, there's a lot of other items that come into that as well. But yeah, like overall, they're very healthy in cash. Like they are loaded with $1 billion in cash. But same was Upstart. Upstart had like $1 billion in cash, and the market really sold them down. So Unity, overall, even at that non-gap loss, 23 million it's okay. It's not gonna be like, no matter how negative or positive you can spin it, it's still okay. It's close to that break-even point, and we probably imagine sooner or later these guys are going to be non-gap profitable. So that should be fine. Like overall, that's fine. I think really what the market's kind of selling them down on was the guidance. So their guidance for revenue for quarter two was 290 million to 295 million, which is a year-on-year growth of 6 to 8%. Like, imagine that. You're literally growing at the rate of a blue chip company, but you're not a blue chip company. And your non-GAAP loss for the operation will be 62 to 64 million, which would be a massive loss for that second quarter. So those second quarter numbers are going to be as horrible as you can imagine they are going to be with this loss, especially when you look at it this way, right? The guidance overall for the whole of 2022 is negative 60 to 75 million. So it kind of forecasts that Q3 and Q4 are going to be quite profitable in terms of non-GAAP anyway, in order to compensate the negative 23 and the negative 62 to 64 that they're losing right now. So they expect some now non-GAAP profitability in the other following quarters, which is quite positive. Their guidance for revenue is 1.35 to 1.425. And that's the growth is going to be around positive 22 to 28%, which is okay. It means those Q3 to Q4 are the really nice quarters when they're going to catch up and make things really count, because Q2 growth is much lower and not very positive. And also operating margins, like operating margins look horrible. Like they're going from negative 21% to 22 and to negative 22%, but it kind of improves overall to negative 4 to 6%. So overall this company is more closer to that break-even point, going to Q3 to Q4, which will be kind of nice in that sense, because they're able to maintain things. They've got a lot of cash in the bank. But I'm not too sure how well the market interprets 22 to 28% growth, because when you translate it down to the non-GAAP, like eventually they'll probably break even next year, which will be nice. But then the market's gonna look at it and go, oh, is that all we're expecting? Because we kind of want big things. We kind of want a very high growth or very profitable company, which you probably won't be. Like, the bigger you get, the slower you seem to be growing. So then I don't actually think this company is going to hold up as a $14 billion company. It probably holds up probably at a $6 to $7 billion company. And especially when you consider that, hey, they're producing $1 billion in revenue. Upstart was also forecasting for $1.25 billion in revenue as well. So when we benchmark these numbers, of course, they're different industries. Like Unity is going to be a leading company, and it's going to continue to really grow at a really nice pace. Upstart, basically in the same thing, but they're probably in a more vulnerable industry. Like Upstart's more in a vulnerable financial industry, whereas Unity, they're quite, a stable pillar in this kind of industry as well. So you could kind of see like Unity is a bit stronger, but they're growing slower, whereas Upstart's actually growing a lot quicker at 50%. So that's the problem. Like when you kind of compare these companies, and you go like, how is Upstart negative? How is Upstart less than 3 billion in value, and Unity Software at 14 billion? And after the sell down, probably they will be probably 8 to 9 billion in value, though that might be still quite high. Like I think there's room for these guys to drop even further. But it depends on the market. Like, if the market's a bit more, forgiving in these situations where it goes like they're more, of an essential kind of company when it comes to this type of industry. Like a lot of people do use it. They are, and the minute they sign up customers, they kind of keep their customers in a sense. Like how they've got 1,083 customers, each generating more than 100,000 of revenue in the trailing 12 months, and that compares to 837 a year ago. And these customers likely stay with them for a longer time frame, so the stickiness of the customers is a lot more than say like Upstart would be, if we're comparing that way. So we're gonna see how things go, but I think this probably drops more than 30% based on how the market kind of views this. That, hey, if the market gave you a multiple of 5, that would just be like on the top guidance, that would be worth 7 billion. So there's probably room for the stock to fall even more than 30%, and likely, if you're into shorting, I mean, it's a possible short, but it's one of those things that I don't recommend shorting unless you know what you're doing. But yeah, like overall, I think the numbers look okay. They're not horrible, but they're not amazing either. But yeah, like definitely it wouldn't merit a 14 billion valuation. And in this market where it's less forgiving, the market literally sees through everything, and the minute you don't produce anything that's really compelling, they will sell you down. The market will sell everything down that's not performing, and Unity is basically the next target. Like after Upstart, it is Unity. It could just be companies that start with you. Who knows? But yeah, like amazing market that we're in right now, where things are just falling like flies. Like it provides really, really good entertainment. Like you won't be bored, but you'll be shocked if you hold the shares. So like hopefully you don't hold the shares, but if you do, like it's hard to find some nice words that are gonna bod well, because no one likes losing money, and with this massive drop you're going to lose a bit of money. But it could be an opportunity where you average down because the company is close to break even. In the long term, like the company looks good for the long term, but in the short term things don't look too bright. But like if you're in it for long term, when these prices come down, it's actually an opportunity to buy into it, because in itself it's a very strong company, and it's actually getting to that break even to profitable point. So yeah, definitely worth looking at if the price falls quite a lot. Until then, good luck investing, everyone.